You want to understand the short-selling titan? We're going to explore the career of a guy who built an empire betting against companies. A real-life Big Short kind of figure, but this isn't Hollywood, this is Wall Street. Jim Chanos. Chanos founded Kynikos Associates back in 1985. $16 million in seed money. And get this, Kynikos. It's Greek for cynic, which seems kind of fitting, right? To be a successful short seller. Gotta have a good dose of cynicism, that ability to see the cracks in the facade when everyone else is blinded by optimism. Now, Chanos' story starts in Milwaukee, Wisconsin, a world away from the financial epicenter of New York City. Born in 1957 to Greek immigrant parents, ran a chain of dry cleaners. It's intriguing to think of young Chanos amidst those pressed shirts, already contemplating cleaning up in a different arena, the stock market. Now, Chanos didn't just stumble into finance, he pursued a solid academic foundation. Graduated from Yale in 1980, BA in economics and political science. And the connection to Yale continues. Today, he lectures on finance and financial fraud at the Yale School of Management. Talk about practicing what you preach, right? His Wall Street journey. It began in 1982 at Guilford Securities, and he wasted no time in making a name for himself. 1983. He predicted the collapse of Baldwin United, financial services company. His analysis, it focused on cash flow, and as we know, cash is king. Baldwin United went bankrupt, and Chanos had his first major win. This early success, it kind of propelled him to establish Kynikos Associates. Chanos wasn't content just riding the wave of a bull market. He saw opportunity in identifying companies headed for a fall. He's not just betting against companies, he's betting against the prevailing sentiment, the hype that inflates valuations. Now, of course, we can't talk about Chanos without mentioning Enron. This was the case that cemented his legendary status in 2000, while Enron was still a Wall Street darling, lauded for its innovation. Soaring stock price. Chanos saw something different. He saw a house of cards built on questionable accounting practices, and he started shorting the stock. When Enron spectacularly imploded in 2001, Chanos had made a substantial profit. This wasn't just luck, it was meticulous analysis, the ability to see through the smoke and mirrors. But Chanos' success, it's not limited to just one spectacular call. He's been consistently challenging market assumptions for decades. One of his major targets, the Chinese economy. Since around 2009, Chanos has been raising concerns about China, particularly its real estate market. He's pointed to excessive debt-fueled growth and a lack of transparency in the financial system as red flags. Back in 2010, he even described China's property market as Dubai times 1,000. Pretty striking image, right? While the catastrophic collapse he initially predicted hasn't materialized, Chanos has remained steadfast in his warnings about a Chinese real estate bubble. And remember, bubbles, they eventually burst. It's a matter of when, not if. He's even drawn comparisons to the Soviet Union, suggesting that China might face similar economic challenges. He's since softened his stance a bit, acknowledging that China is not a carbon copy of the Soviet model, but he still believes that the country needs a significant economic overhaul, and that a bumpy road lies ahead. Now, nobody's perfect, and even the most astute investors, they make mistakes. One of Chanos' most public short positions has been against Tesla. He's been a vocal critic since 2013, citing concerns about shrinking margins and intensifying competition initially. His Tesla bet resulted in losses. The market didn't seem to share his skepticism, and Tesla's stock continued to climb. But Chanos, he hasn't backed down. He stands by his analysis and continues to express doubts about Tesla's long-term sustainability. Only time will tell who's right on this one, but it's a testament to Chanos' conviction, his willingness to go against the grain even when facing headwinds. Another long-standing short position for Chanos. Caterpillar, back in 2013. He predicted a downturn for the heavy equipment manufacturer, largely due to his concerns about China's slowing infrastructure boom. And remember, he's been sounding the alarm on China for quite some time. While Caterpillar hasn't experienced a complete collapse, its stock price has been volatile. Chanos argues that Caterpillar's fate is tied to the Chinese real estate market. He sees a connection between China's infrastructure spending and the health of its property sector, highlighting his ability to connect the dots between seemingly disparate economic trends. It's not just giants like Tesla and Caterpillar that attract Chanos' attention. He's also targeted companies like Luckin Coffee, Wirecard AG, the Hertz Corporation, Beyond Meat. This demonstrates his willingness to scrutinize companies of all sizes if he believes their valuations are inflated or their practices are questionable. These diverse short bets, both the successful ones and those still playing out, they paint a picture of Chanos as a meticulous analyst who doesn't shy away from challenging conventional wisdom. He's not afraid to dig deep, to look for the flaws that others miss, and to hold his positions for the long haul, even when the market seems to be proving him wrong. Now in late 2023, Chanos made a surprising move. He closed his hedge fund, returned outside capital to investors. This came at a time when the S&P 500 was performing well, and some of his high-profile shorts, like Tesla, they were doing quite well. This decision, it sparked speculation. Was Chanos stepping back from the game?
Or was it a strategic recalibration? Even though he closed his fund, Chanos remains a prominent voice in the financial world. He continues to share his opinions, expressing skepticism about companies like Tesla,
voicing his outlook on the Chinese economy. It seems that even without managing outside capital, Chanos is committed to his role as a financial watchdog, keeping a keen eye on companies and markets that he believes are headed for trouble. His commitment to analysis and truth-seeking appears unwavering. What's truly fascinating about Jim Chanos, he isn't just betting against companies, he's betting against conventional wisdom. He's a reminder that even in a bull market, risks lurk beneath the surface, and critical thinking, it's essential. His career is a testament to the power of meticulous research, the courage to challenge the status quo, and the importance of maintaining a healthy dose of skepticism. Now, if you're as intrigued by this financial maverick as I am, make sure to hit that subscribe button. We'll be back with more insights into the world of finance, investing, and the people who dare to challenge the system. So Chanos, he's more than just a guy with a hunch. He's a Yale graduate with a deep understanding of economics and finance. And remember, he teaches a course on financial market fraud at Yale. That's a pretty unique qualification, don't you think?
So how does Chanos find these companies teetering on the brink of disaster? His strategy. It's not about chasing rumors or making impulsive bets. It's about rigorous research, delving into the heart of a company's financials to uncover fundamental flaws that the market might be overlooking, or perhaps more intriguingly, choosing to ignore. Think of it this way. He's not just glancing at the sticker price. He's taking the product apart, examining each component, searching for any signs of weakness. And once he identifies those flaws, he's patient. He's willing to hold his short positions for extended periods, sometimes years, waiting for the truth to emerge. In the world of short selling, patience isn't just a virtue, it's a necessity. Now, Chanos isn't afraid to target some of the biggest, most beloved companies. We've already touched on Tesla, but let's revisit Enron for a moment. This is a company hailed as an innovator, a Wall Street darling. But Chanos saw something different. He saw a company built on a shaky foundation of accounting practices that were, let's just say, creative. He began shorting Enron in 2000, and when the company filed for bankruptcy in 2001, his analysis was vindicated. It cemented his reputation as a Wall Street legend, the guy who could see through the hype and expose the truth, no matter how uncomfortable it might be for the market. And then there's China. Chanos has been vocal in his criticism of the Chinese economy for years, warning about a real estate bubble poised to burst. He's particularly critical of the country's reliance on debt-fueled growth and the lack of transparency in its financial system. Remember that evocative phrase, Dubai times 1,000? That was Chanos back in 2010, cautioning about the potential fallout from China's overheated property market. While the full-blown crash he predicted hasn't occurred yet, he remains steadfast in his belief that China's economic miracle is built on a foundation that could crumble. And let's not forget Caterpillar. Chanos set his sights on the construction equipment giant in 2013, arguing that its growth was heavily reliant on China's infrastructure boom. He predicted a downturn for Caterpillar as China's growth slowed, and its demand for construction equipment waned. To some extent, he's been proven right. Caterpillar's stock price has experienced volatility in recent years, and the company has faced challenges as China's economy has shifted away from its dependence on heavy industry. It's a prime example of how Chanos connects the dots, recognizing how global economic trends and specific company vulnerabilities intersect. But Chanos' targets, they aren't confined to just the corporate world. He's also taken aim at entire sectors, like for-profit education. He argues that these companies exploit vulnerable students, burdening them with debt while delivering questionable educational value. It's a stance that has generated both praise and criticism, but it underscores Chanos' willingness to challenge powerful interests and confront industries he believes are fundamentally flawed. Whether you agree with his assessments or not, there's no denying that Jim Chanos is a force to be reckoned with in the financial world. He serves as a stark reminder that even in a bull market, risks are always present, and critical thinking, and a healthy dose of skepticism. They're indispensable for any investor. His career, it's been marked by bold bets and controversial calls, demonstrating time and again that he's not afraid to challenge the prevailing consensus. So what lies ahead for Chanos? Even though he's closed his hedge fund, he's still out there, sharing his insights, offering predictions about the market, and you can be sure people are still paying attention. After all, this is a man who has built a career on being right when everyone else is wrong. In the unpredictable realm of finance, that kind of track record, it's invaluable. His decision to close his fund in late 2023, it was certainly unexpected. After all, why walk away when you're at the top of your game? It seems that Chanos simply felt it was time for a new chapter. He's mentioned wanting to focus on teaching and mentoring the next generation of investors. It makes you wonder if he sees this as an opportunity to impart his knowledge and experience to a wider audience. to shape the way people think about risk and opportunity in the markets. But even though he's no longer at the helm of a hedge fund, Chanos isn't exactly retreating from the spotlight. He's still a sought-after speaker and commentator, sharing his perspectives on a wide range of topics, from the future of the Chinese economy to the rise of cryptocurrencies. Interestingly, he's recently stated that he doesn't anticipate a dramatic collapse of the Chinese economy. He believes a gradual slowdown is more likely, with China facing significant hurdles as it attempts to transition to a more sustainable growth model. It's a nuanced view that reflects his deep understanding of the complexities of the global economy. And as always, he's not afraid to go against the grain. While many investors are enthusiastic about cryptocurrencies, Chanos has expressed skepticism, likening them to a speculative mania. He's argued that they lack the fundamental value of traditional assets, and has cautioned investors about the risks inherent in this volatile market, this willingness to challenge prevailing wisdom. Even when faced with widespread enthusiasm, it speaks volumes about his independence and his commitment to sound investment principles. It's a valuable lesson for investors of all levels. So, what can we glean from Jim Chanos' remarkable career? First and foremost, it underscores the importance of continuous learning. The financial world, it's in constant flux, and to stay ahead of the curve, you need to be a lifelong learner, constantly seeking new information, challenging your assumptions. Chanos' success, it's a testament to the power of a curiosity, the willingness to ask tough questions, and the ability to connect the dots that others might miss. But beyond the technical skills, there's something else that sets him apart: his integrity. He's built his career on honesty and transparency, even when it meant going against the tide and challenging powerful interests. This commitment to ethical conduct, it's arguably his most significant legacy, and one that all investors should aspire to emulate. Jim Chanos may be stepping away from the daily grind of managing a hedge fund, but his influence on the financial world will continue to resonate for years to come. He's inspired a generation of investors to think critically, to question assumptions, and to never shy away from betting against the crowd. And as he embarks on this new chapter, focusing on teaching and mentoring, you can be sure he'll continue to encourage others to strive for excellence and to make a meaningful contribution to the world. So there you have it, Jim Chanos, the short-selling maestro, the financial detective, the man who fearlessly speaks his mind. His story is a captivating one, filled with unexpected twists and turns, triumphs and setbacks. It's a reminder that in the world of finance, where fortunes are made and lost, the only constant is change. Thanks for joining us. If you're interested in more stories like this one, make sure to hit that subscribe button. We'll be back with more explorations into the world of finance and the individuals who shape it.